everyone, it's Assaf and Trevor, and today we're going to do a small market review and market activity that happened in 2020. Before we start, just wanted to let you know that we have a giveaway, and at the end of the video I'll tell you how to register and get it. So please watch through and listen to instructions on how you can get your Christmas holiday gift. So stay tuned. It's important to know that we're going to cover market activity in Newmarket neighborhood alone. If you live in different pockets of your region, it requires a separate market analysis. We can do it, but it's a topic for a different day. 2020 COVID year, we were expecting a slowdown, however the opposite happened. We had a significant increase in transaction volume and sale prices. Over 1,400 freehold homes sold in Newmarket versus 2019, just over 1,200 homes sold in the same area. We believe that there have been a few contributing factors to it.
So I believe one of the factors impacting our market today is the cost of borrowing. We have seen it at all-time lows in the last 12 months. Every time we think we've seen the bottom, they drop yet again. So why is this happening? Well, it's basically tied to the cost of banks borrowing to loan money. In the fixed market, that is determined by the bonds. We've seen the bond market decrease in the last year, which of course has been impacting the fixed interest rates. Fixed interest rates have been coming down, although there has been some indication we may see a slight increase in the next year. The variable mortgage rates are often controlled by the Bank of Canada's overnight rate. The Bank of Canada has decreased their overnight rate several times over the last year, thus allowing the banks to reduce their cost of borrowing and passing that off to clients. The variable market is not expected to see any increase for the next couple of years. Although there is nothing really guaranteed in this, it is expected that Canadians will continue to see support from the Bank of Canada through these trying times. Lenders have been extremely busy with the volume of business and mortgages being processed these days, and they're also highly scrutinizing employment.
From my observation from market reports, there is a lot of people that move from downtown core to York and Simcoe region. Also, we have noticed that a lot of condominium owners have chosen to move to freehold properties. Over 3,500 condo units have sold in York region alone. Again, I'm referring to the database that Toronto Real Estate Board is providing to us. You might think to yourself, what is the average price of my house? Or is the market going up? And the answer is yes. It has been a strong seller's market, and in some cases we had from 10, 15 to 23 offers on a single property. Having said that, we were still able to find homes that sold below market value with 1 or 2 offers, and it has been a great deal for the buyer. We have also observed that the amount of homes sold and the sale price have decreased from October to November, and is also expected to decrease in the months of December and even maybe January. It's not guaranteed, but we do expect a slight decrease in market activity in the winter month.
A pre-qualification is always a great idea of providing you information and guidance as to just to where you can go in the market. And that's whether it's your first, second, or third home. Many people come in suggesting that they know what they're good for and assuming they can attain a mortgage. That's not necessarily always true, hence the need for us to do a proper review. I am, and I have always been, a big advocate for my clients to have a condition of finance with their agreement of purchase and sale. We've seen this come up as of late, where a client buys a house, for example, at $650,000. Yet when the appraisers come in and evaluate the property, it comes back at $600,000. Now we have a shortfall of funds available, and the lenders will only go on the lower value as it's been appraised. So in this particular case, the client would be responsible for finding that additional $50,000. If it was borrowed, we do need to work that into our equations. Pre-qualifying is a great idea for understanding your capacity and just what you should be looking at. There are many factors that go into determining your mortgage capacity, including your income, your debt structure, your credit scores, and so on. Each one of these does have its nuances that does need to be approved and verified. Thank you very much for joining us today. Assaf, what do we need to do to win this gift?
What gift?
This gift!
Subscribe, like, and share this video. Follow us on Instagram and you'll have a chance to get this gift. I'll talk to you soon.